Justin, before we go into the questions, tell me the current situation you're seeing with GME and how you're going to react if different situations play out.
Gotcha. So just where I'm at right now, I've got August calls, October calls, and my January 2023 calls. Now, the problem that I'm facing right now is a theta problem with August and potentially October, but August is the main one I'm concerned the most about. So if you're following PyPhi Stream, as you should be following PyPhi Stream, he notes that we might have a peak of ETF FTDs. The nice thing about ETF FTDs is that they typically drive positive price action. So if we see that on Monday, plus whatever T plus 2 we have covering from the prior week, remember we closed what, $40.02, I think? So there probably will be some call or the back. There might be some hedging that needs to be done, but probably not a lot. But then again, a little here, a little there, a little over there, it all kind of adds up in the end. So what I'm paying particularly close attention to are potential exit opportunities for me to exit my August calls. I still want to maintain exposure to the August OPEX, but I think I'm going to be much more judicial about buying back in. Mainly in the past, we've seen not deep in the money, but let's just say relatively in the money puts come in when they want to slam the price down. Typically, they've wanted to slam the price down so it runs the most. And remember, it's the change is what they're banking on when they're going, I guess it would be long volatility. I think long volatility in this position. So anyways, Josh, kind of my plan is that if I can take some of my risk off the table for August, maybe October, and see what happens. If we don't see any puts coming in, then I'll just have to chase. But if we do see puts coming in, that'll make me very interested. I might chase a little bit with puts, but when it drives down to, again, this is basically just me following, pretty much what PyPhi and those guys are doing, I would probably seek to re-enter the position towards the bottom if they do decide to do this, and then ride it back up. So that's kind of my take on GME. Josh, yours?
Well, currently, I just started a new business over these past few weeks, so I am just swamped with work. So my market game has gone down substantially. So the input that I have is kind of from past data that I've collected, and I have not yet studied and seen the new data that we have seen come up. So I've been taking a lot of your points, which is the absolute worst thing I can do, especially knowing that we have a 100% success rate of failure. So my portfolio is just kind of trickling around, but it's not my main priority right now. As for GME, Rev, and BBBY, I did close my BBBY call position just because it was expiring in August. I closed that on Friday for a substantial gain, which it was down greatly before. I'm very interested in picking up more BBBY calls, and I would do shares as well, but a substantial amount if we get above $10. Let me just share my screen really quick over BBBY's option chain. I haven't really looked at this yet. I mean, this is my first time looking at it in a long time, real time. Shit, Justin, you might have to do that.
You want to pull up the?
Yeah. I got it. So, just looking at the order chain, I mean, there's been so much positive delta for so long. We saw a bit of a kick going into Friday's close, but let's see. This is really my first time looking at the on balance delta of retail and institution is just out of this world. I mean, it is incredible how much retail has been buying buying options on this, and I think.
And Josh, let me jump for another second too. Like one of the things that PyPhi noted, he's been doing this for some time, was back. He mentioned that, and like this is something I cannot speak to the veracity of, but I trust the source. Is that the way they went short on Bobby was very crude in the sense they basically just bought a bunch of ITM or in the money puts. Sure, that sent the price down, but it's very visible. And so the result of that is that when you slam the price down and keep it down, retail will start buying in. And granted, retail might only be buying in a little bit every week, but if they keep stocking up a little after a little after a little, that actually means something. And in my case, my Bobby calls, I too have an August position, which I think I'm going to sit on for the time being, Josh. I might put up some trails on it once they get enough in the green, but honestly, I'm going to sit on it. And
I think that's super viable. I would probably be doing the same thing if I had the opportunity to be as active in the markets as I was a few weeks ago. Right now, I currently don't. I would be just like anyone else who's just swamped with work at all times. So I need to play this a lot more passively. Stop losses are a great idea, but I just said, you know what? I want to take the risk off the table. I'm completely fine chasing if we get above 10. For Rev, I do have quite a bit of calls for. I mean, I don't even really know the full thesis on it. Like
Oh,
it is pathetic how little I know about the current events that are going on. I've trusted Justin's input. I did also. I looked a little bit on the option chain, and I haven't watched a second of PyFi in probably a few weeks, so I have no clue what's going on over there either. As for GME, I have not really done anything with my call position because most of them are going out towards January of 2024. So I'll kind of see what happens and then trade it actively, listening to Justin in the meantime.
yeah, and like here's the big thing, right? So like myself, I've got another buddy who's got an August position as well for GME, and I'm kind of torn on that front because I have calls at 40, and there is a good chance GME could close above 40 on the 19th. And if that's the case, I definitely like using the idea of options to take delivery of the underlying. Same thing with Bobby as well. But in order to do that, you've got to have the cash to exercise it. So one of the things I might pay attention to is I'll see what Bobby does. And like ideally, this would be like an ideal scenario, like I don't know, if Revlon blows up or whatever, right? And I'm able to generate enough cash from that. And Bobby continues to climb, but not moon. And GME continues to climb, but not moon. What I might do in that case is that if the 19th rolls around and I have enough cash, which would be a substantial amount of cash, I just might seek to say, you know what, screw it. Contracts are in the money. Give me the shares, and then go from there. Because I definitely like that idea. You asked the question about the Revlon thesis. So the Revlon thesis is, I guess I would start, if you haven't already read it, PyFi last week and posted a really good DD talking about liquidity and kind of like, how that's affecting the market. So it's a little dense to get through, but just because it's dense doesn't mean it's not good. So, take an hour or so, or maybe read it over a long lunch or whatever, right? It's worth, or it was worth my time, probably worth your time. But the key thing is that there's only like a 7 million share float on Revlon. An insider or someone, if it's not an insider, there's one shareholder who controls quite a bit of it. The company is in bankruptcy, to be sure, which is of course a cause for concern. But at the same time, you have a continuing increase of failure to delivers on the stock itself. Now, when it comes to talking about the mechanics of FTDs, that's market mechanics, and that is really not my bag. But the way to think about it, at least the way I kind of thought about it, is that it looks kind of GME-ish, circa November 2020, December 2020, which means options are at play. And so when I go into options, typically for Revlon, I'm going for the January 2023 contract. I've got a decent position in the $35 calls, which is the top of the chain. Sold off some of them for a bit of a profit, but still kept some of them. I'd like to buy back in maybe around 50 cents to 70 cents, per, or so, $50 to $70 per contract if I could. But I'm also ready to chase. Like last Friday, if you remember the graph, Revlon, it spiked, fell, and then spiked again right into close. And I was fortunate enough to basically, we'll see if this actually pans out. But I did pick up some $9 calls chasing right before market close on Friday. So very curious to see how that goes. But again, with the January 2023 expiration date, I'm not back, or I like to think I'm not backing myself into a corner, as I kind of am starting to get backed into a corner with my August calls.
Yeah, that makes sense. We don't even have a lot of questions. We just kind of went over what we're doing with our positions. Let's go to Jackson. Any thought on the GameStop stock distribution process?
Yeah, so there's an old phrase that goes, never attribute to malice that which you can explain by stupidity. So that's kind of like, the first thing I would say on that. The second thing I would say on that is, I have seen the rumors, and my attitude as far as that goes is, it's interesting. I'll keep paying attention to it. But at the end of the day, the rent's still due on the first of the month. And what I mean by that is, okay, well, look, if there is, monsters lurking in the murky depth, so be it. But at the same time, if we still have the potential for these OPEX runs to occur, or even on GME, on Bobby, Revlon, whatever, if we still have the potential for these OPEX runs to occur, I'll keep doing that until it's no longer viable to do that. And if you do have, a sudden, bizarre alignment of the planets where everything comes together and then the system basically breaks and you basically get MOAS, then in that case I've got a position that's theoretically protected against that as well. So I guess the way I would say it is that it's a good thing to note, put it in the file, keep tabs on it, but don't let it affect your day-to-day trading.
Next question. Hey, thoughts on the Canadian fertilizer new rule? I'm trying to read up on it right now as Justin was just going over that question. It seems like Trudeau is proposing a cut of fertilizer emissions by 30% as the government's role to reach net zero by, of course, 2030. Such a weird year, Justin.
Yeah, like it's a pile of shit. What can I say? Excuse me, I shouldn't have gone there. No, what as far as this goes, like I am now. So just as I was complaining, you should never attribute to malice that which you can explain by stupidity. I think the stupidity we've seen out of the woke leftist leaders, not to get too political, is now bordering on malice. If you look at what's going on in Europe, if you look at what's going on in Canada, my attitude would be like, guys, are you intentionally trying to like kill people? Like, because that's honestly what it looks like. And like, I think from the big picture, you have, as Thomas Sokol, the anointed class, the intellectuals, who think they're the masters of the universe. And one of the things, you look at the Georgia Guidestones, you can see this really clearly. They talk about how one of the imperatives of humanity is to bring the population to 500 million to live in harmony with nature. So let me just translate that. 500 million down from what are we at, like 9 billion, means they need to exterminate 8.5 billion people. Translation, that means they need to exterminate you. And one of the easiest ways, or not easiest, that's not what I say it, one of the ways to manage this is you take the guns away from people so they can't fight back. And then what you do is you basically destroy you take advantage of the guilt mechanism of people. In other words, you tell people that they're bad, you break their connection with their history, you make up some boogeyman. In this case, it's green environmentalism, like, oh my God, you were destroying the planet, and oh my God, humanity's a plague on the earth. Jordan Peterson talks a lot about this, I think much better than I can. But the key takeaway is that you create the understanding and the acquiescence of the people who follow and buy into this bullshit to basically say, yeah, well, there's some sacrifices, but it's probably good. I've got one of my best friends is Canadian, and I've always joked with them that the way that you exterminate Canadians, like I mean this seriously, the way you exterminate a bunch of Canadians is you put up a big sign, right in front of the pit of death that says you must jump into the pit of death. And the Canadians, God bless their kind, simple, naive, pathetic hearts, they'll just file right along, one after the other, like lemmings into the pit of death. And if anyone does complain, it's like, oh, yes, ma'am, you have a question? Oh, I'm sorry. You don't want to jump into the pit of death? Oh, I'm so sorry, but that's what the sign says. I'm so sorry, so sorry. It's like they have no fucking... They are naive to a incredible extent. But anyways, if that's what they want, that's what they get.
I've been reading up on it a bit, and first off, we need to go back to what is fertilizer, what's already happening with fertilizer. Ukraine and Russia and Belarus already produce the majority of the components that are needed in fertilizer. And there's a war going on over there. Russia's obviously sanctioned and everything. So that source is already pretty much dried up, or you're going to be paying drastically different prices through a third-party source, like Russia selling it to China, China selling it to the U.S., something like that. And now there's been, food plant bombings that have just been extraordinarily mysterious for the past few months at a mass rate that we've never seen before. This is the Canadian government cutting emissions by 30%. That is going to just cut supply even more. At what point does saving the climate have to interfere with saving people today, or just not killing them? Because this is literally just attempted murder at some point. But I don't want to go on too long of a tangent.
If your goal is to reduce the population, this is an excellent way to reduce the population, and do it in a way that makes everyone feel really good.
Yep. So what are your thoughts on Larry Fink and BlackRock?
The big black rock. Yeah, Larry Fink and the big black rock.
He's one of the elites, I would say, for sure.
I want to say something.
It's hard to have a good opinion on someone like that. He could be a good guy, probably not.
So, Josh, I can't say this on stream, but you know what I want to say, right? Anyways, what I find very interesting about BlackRock is they keep pushing ESG or whatever, right? And if you guys follow Scott Adams, the Dilbert guy, he does a daily podcast, good follow. Typically what I listen to at lunch. He has decided to take on ESG, and when you think about how stupid ESG is, it's whatever. But you asked your question about Larry Fink and BlackRock. Again, it's part of the anointed intelligentsia. The problem, not a problem, but sooner or later, the masses are going to have to wake up, because if people just want to go into pure passive investing or whatever, right? Okay, but in order to do this, you have to give up a ton of control of your assets, and then you're putting it in the control of these mid-level managers, or these managers who stand in the middle, such as what Fink is at BlackRock. Because Fink has the ability through BlackRock's holding to basically exert tremendous influence on the governance of corporations. And the reason he has this influence is because people are willing to give Fink his money, or people are willing to give BlackRock their money to invest passively because they don't want to do it themselves. So again, it's the same thing. This is the bed that apparently we're making to lie in. And if for no other reason, I mean, Adams talked about this earlier today. Tesla was given a middle of the road score on ESG, and Coca-Cola was given
Yeah.
a perfect score. And here's the thing: like, if you honestly care about like reducing carbon in the world in like a meaningful way that the average person can enjoy, like, I'm hard pressed to think of a company other than Tesla. I'm sure I'm sure others exist, but in terms of like a high profile
I
name that
think
people know,
Ford Motors also had a higher rating than Tesla, I believe. It's
yeah,
just who's the person that is judging these emissions and how do you
yeah.
actually calculate emissions? It's not feasibly possible because it's the boogeyman. So let's go to the next question. Uh, what are your overall views on the market and inflation data? Have we seen the worst or are we going to see lower lows? I'm going to give you guys some insider scoop that I am actually very happy that you asked this question, Jackson. So yesterday I was on a call with a guy who he would be like a Warren Buffett type. And I mean, he has that kind of money too. So, what he's saying, it's seen right now. He's in tap with a lot of these real estate syndicators, kind of like Justin, where they have a ton of units, and their goal is to acquire money to buy properties, and they get a percent of the fee, and they have a ton of different properties. So he says right now he's never seen this before in his life, not in 1999, not in 2008. He has 9 deals on his table. He's already closed many of them that he's told me about, where there's like hundreds of millions of dollars that are just going to get washed away into these syndication deals because nobody's buying them. Like, they can't raise enough money. And this is something that we haven't seen in a while, where people are not being able to raise money. So they go to the lender of last resort. A lot of people call Buffett the lender of last resort. The way this guy's structuring deals, I almost feel bad for the people on the other side, because I mean, if you are a forced seller and you need the money no matter what, because you want your reputation to maintain strong, you're going to do whatever it takes. So I mean, they're going to him and they're putting up ridiculous interest rates on short-term loans that and on top of that, they're putting 100% of their portfolio up as collateral. So if they fail to deliver, I mean, the worst case scenario is they fail to deliver, he gets their entire portfolio of assets, which are already hundreds of millions of dollars of real estate. If nothing goes wrong and they do get the money, then they have to pay him like a ridiculous interest rate. The reason why someone would take this astronomical and a retarded loan, to be fair, is because they need to maintain their reputation, because they need the money, and because they can't fail on that deal. So if this is happening on mass scale right now, he says we're kind of in like a standout point where the market isn't really going anywhere right now because everybody's trying to get these lending as much as possible. And if he has 9 deals, Warren Buffett has 150 deals where people are doing this exact same thing. At some point, the capital will not be raised. The lender will not go through, and we will start to see forced sellers. And forced sellers is liquidity crises. The difference between now and 2008 is 2008, a lot of people they were the local people like me and Justin. We'd go out and buy a single family house and try and rent it out because we want the appreciation. But now, instead of people just buying these single family houses, everyone has upgraded to massive multifamily units, and they have thousands of units in their portfolio, and everyone's leveraged and has so much other people's money on the line that I think it could cause some catastrophic damage. I personally wasn't even that bearish before I talked to him, but now I'm ridiculously bearish because it seems like we could be at the precipice of a new fisting.
Yeah, no, Josh pretty much sums it up on that front. So, yeah.
And well, if that's with real estate, I mean, we could see that with everything. Inflation data, I think we probably. I'm not going to say peak short term, but I don't think we're going to see massive rises in inflation. But I do think the Fed's going to continue to raise rates, and I think the market is going to break at some point. I mean, if you look at the yield curve right now, it is so fucked. Like the 6 month is trading over the 10-year and the 2-year, but the 1 year is trading below the 2-year. I mean, the yield curve right now is so ridiculously fucked. It's not even funny.
And nobody cares. That's the thing,
cares.
right?
Yeah, but like when you think about it, The yield curve is signifying at what rate lenders are willing to lend money. And treasuries are traded trillions upon trillions of dollars a day. And if the market is pricing a 6-month loan higher than 10 years, what the hell does that mean? I mean, they're basically saying that, oh, we think the Fed is going to take rates to zero and below that in the future. So I'm completely fine. But then you would say, well, right now inflation's at 9%. You are guaranteed to lose money on those loans. Well, they actually create money out of thin air when they make the loan, but still, it is pathetic. Justin, I think you'll have a good answer for this one. Thoughts on DTCC fuckery?
Yeah, so the answer to the question is that number one, I would say never attribute to malice, that which you can explain by stupidity. Said that before. But the way I would think about it is like this, like the DTCC, yeah, there's probably a role that they have in this, and nor do I think there have been angels. But what I would say in the interim is this is one of those things, at least here's how I play it, is that I keep an eye on it. I'm curious to know more about it. I'm curious to do what I can to understand, how market mechanics work, how the settlement process works, etc. But at the end of the day, the operational focus that I need to focus on needs to be on executing trades profitably, or doing your small business profit, or whatever, right? Running your real estate profitably. And so it's one of those things where, as far as the fuckery goes, my take is it will continue to go on until it can't. And I'm not trying to give you a non-answer on that front, but I am trying to say is that the people at the DTCC, the people behind the people at the DTCC, and the people behind the people who are behind the et cetera, et cetera, et cetera. Like, these people are not fools. And if you do accept, and this is something I would agree with as well, the premise that there is shenanigans going on. These shenanigans are being executed by some of the most well-connected, most powerful, most influential people, or at least people who have access to the people who have, the power and the influence in the world, and they will not go down quietly. Now, it's not to say they can persist indefinitely, but just understand, the theoretical villains behind the scenes here. So anyways, in the short term, yes, the thoughts on the DTC fuckery, probably the case, but in the interim, that's not going to stop me from trading. That's not going to stop me from trying to understand how the market works, fucked as it may be, and trying to profit from it.
When margin call, I would say sometimes between now and the inevitable end of the time.
Yeah. Well, the margin call is going to occur when, the way I view it is, because I'm trained as an accountant, when balance sheets can no longer be expanded, that's when the margin call gets occurred. Or if balance sheets suddenly implode upon themselves, where people no longer trust the collateral that's been posted to support the margin, that would be, in fact, that's not balance sheets expanding, that's balance sheets contract. So there's your answer to your question. Either balance sheets stop expanding or balance sheets start contracting. And the reason they would contract is because you would have issues, or you would have concerns over collateral. Or that would be very, very high level, that's my guess.
How's it going, Hyder? How much collateral is needed to keep the system going on a daily basis? Well, if you look at the repo market, there's between like $4 and $6 trillion a day that we can track that are being transacted, and every single one of those transactions is backed by a equivalent amount of collateral. But that is just with tri-party repo. Like, if you go for the bilateral repo, it's even higher than that. I mean, we could be looking at anywhere from like $5 to $10 trillion being passed back and forth per day, and a substantial amount of collateral. If there's $10 trillion worth of dollars being transacted today, there's about $10 trillion worth of collateral being transacted that day as well. So it is however much money is in the system, an equivalent amount of collateral needs to be there, almost more so.
Yeah, and the other thing too is that, like, when collateral gets rehypothecated and repledged over and over and over again, you have like faux collateral, like maybe synthetic collateral. Now, a good example of this, so in other words, your synthetic collateral is only as good as the counterparty in this particular situation. What's interesting is you look at reverse repo, which gets a lot of press. Or at least, Superstonk loves talking about reverse repo. And I do think there is something to the reverse repo angle, but I don't think it's what Superstonk thinks that it is. Like, the Fed only has like 300 million and change, call it maybe 350 million and change of treasuries on their own balance sheet, at least when I checked, last month or whatever, right? But the RRP program is, Josh, what's it running at, like 2.2, 2.3 trillion, like thereabouts? And so the thing is like there's an extra 2 trillion of synthetic treasuries that are sitting on the balance sheets of mutual funds or whoever can participate in RRP. Now, this strikes me is that if you have these people, that is, the people who are going to the RRP window in order to get this because they need treasuries for whatever reason, that also means there's 2.3 trillion of demand that's being diverted from the main market. And at the same time, you also see treasuries that are beneath the RRP floor, which doesn't make any sense. And so if nothing else, it just suggests to me that there is this massive demand for treasuries that is above and beyond whatever the treasuries pay. And the answer to this, you fellow Jeff Snyder, is probably there's a collateral component to supporting it. I don't know how the pieces tie together, but that's...
Yeah, Justin's underplaying how big the spread is between RRP and the 4-week T-bill. The reason for that is if you can give money to the Fed at an interest rate, that should be the floor on any interest rate ever. And that's the goal of what it is. That's what the kind of is in place for. I see you giggling, Justin. What do you want to do?
Okay, I hit the like button, yeah. But I want to talk about this. JF, yeah, pretty retarded, but I really enjoy your viewpoints. So I've got a funny personal story on this front. So one of the guys I used to like to follow until his untimely passing was Kevin Samuels, and he was really big on fragrances. Like, it's really important to have a scent, and like I kind of knew it, but like only after I heard it from multiple people, I was like, okay, screw this, whatever, right? So I went out yesterday, did some shopping, got some cologne for dudes or whatever, right? And so when I was there, I took a picture, I sent it with my other buddies, and I said, like, wow, shopping for cologne is really, really dirty. Because, the ads can be pretty, like risque or whatever, right? So I never sent it to Josh. But
he really did me. He did buy like 10 different cologne things that just like the most expensive ones he could find. He said,
were the most expensive ones.
Oh, yeah.
Yeah, they were, but whatever. The point is that... So completely that. Then Josh sends me a picture earlier today. He's like, Justin, this is what I got. I'm like, oh my God.
We hop on StreamYard because he sent me the picture of his like 10 lined up that he just bought yesterday. So I come on stream and I'm like, oh wow, look at what I just got. And I just see him start dying laughing. And then he sends me the screenshot of him and our other buddy, the conversation that they had where he was talking shit about this brand saying it's for the homos.
Well, anyways, yeah, so that's that on that front.
So let me keep going with RRP. Yeah. So our RRP yield is 2.3%. If you give money to the Fed, or if you give money to the Fed, you get collateral. They give you 2.3%. For a 4-week T-bill, it's yielding like 2.15% or something ridiculous like that. I mean, it might even be less than that. The last time I checked, it's 2.12%. I mean, that's the basis points there is just incredible because that is just so much extra demand that the market can't absorb through the Fed that they have to go to the open market to get this collateral that is just so desperately needed. So when you first make a buy in a new stock position, what percentage of your capital do you make to buy your first? Do you make on your first buy? Me and Justin are different. Justin kind of throws a lump of cash and settles his position right away. I much more ease into my positions. I don't know if you've changed your strategy, but like let's say I think something's going to happen because I'm playing a volatility position on GME for an OPEC cycle or something. I'll probably start dipping my water in by maybe establishing 30 to 50% of my position. Then over the next week or two, or however long my time frame is, I'm going to start averaging into the 100% position that I already wanted. Let's say I want to put $10,000 into GME calls. I'll probably start by structuring like $3,000 to $5,000 initially, and then gradually get my way up to that 10,000 that I wanted my position to be.
Yeah, no, I would say probably what I do, I've gotten much more tame. Like if it's something that I feel confident in, I'm not very shy about establishing a position quickly. For others, like I started playing Tesla, I started playing the SPY, I started playing CAT. If you check out the description, there's 3 links. If you have ThinkorSwim, like that's pretty much what I'm in. Maybe the closest way I can explain
all your watch lists on there, like the gold, silver, the like uranium watch list. That's going to be quite a bit of value that Justin provided. It's every stock that he looks at. So keep going.
Yeah. Oh, and all those everything that's listed, I actually own. So it's not like this is what I'm thinking. Like no, this is what I've actually bought.
So Justin put his entire portfolio. Does it say like the percents, or is that just like each stock that you own?
No, it's just a watch list. But what I would say is when it comes to like the junior miners, so like if you want to get into the commodities place, like the way I typically think about that is I throw like $1,000 at each one, and then like because it's so volatile and it's so risky and it's so thinly traded. But I do want exposure, and I go to enough of these conventions a year where you can actually meet like the CEO, you can actually meet like, the president or whatever, right? Talk with them and kind of get a feel for them. So that's kind of how I do my due diligence on that. It's more so, do I think that the people who are talking are credible? Do I think that they're trustworthy? Versus like going, and then I mean, I will look to an extent at, the reports, but really I first look at the people. So.
Uh,
I tend to dump my position. Yeah.
so, Justin, you actually want to make a video strictly on cologne. Why would you use cologne if you're not stinky?
Well, yeah. So the reason is that I kept getting feedback from multiple people. Like cologne's one of those, or like having a scent or a fragrance is maybe the better way to say it. It's one of those things that actually like you get quite a lot of mileage out, guy or girl or whatever. So yeah. But the thing is, I only take a weekly shower when I do. Actually, that's not true. But yeah. So it's one of those things I'm trying to step up my game on that front. And like I said, Samuel's had a bunch of good recommendations before he passed. So
Uh, what when you guys buy options, what percent loss do you set for your stop set? When I'm buying options, I don't initially set a stop loss. That's for sure because they're so volatile. And if I have a thesis, I'm gonna wait until like I usually have a time horizon on that thesis, so I'll let that time horizon go out, and then I'll see. All right, how am I gonna manage it from here? Has it flopped massively? Am I up? And then where do I manage it? If I'm up, maybe I set a stop loss at so I maintain a gain. If I'm down, sometimes I just close, but it's really dependent on the position, my time horizon that I'm looking at, and how it's already playing out.
I like Pi-Fi's strategy of when you find an option, you buy it, you never sell it. You hold it underwater and strangle it until it gives up every last ounce of value. Now, typically what I'll do is I used to set stops once they were trailing stops, once they were enough in the green so that I would get stopped out. And that's worked out well for me. Although I got stopped out on my Tesla puts and I shouldn't have been so much of a, well, whatever.
Mostly.
Yeah, well, I definitely made a profit, but I would have made much more profit if I waited just a little bit longer. But profit is profit, and it's never wrong to take profit. So typically, what I've done in the past is I've done that. The other thing is that I'm in a position where I can basically sit on the stream, a Pi-Fi stream all day, and so like as soon as I hear like, oh, what's this? IV's starting to crush. Oh, the market is priced on IV. It's like, ooh, close, 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 close. Like I just market dump that if it's starting to move against me. But there, you maybe will have a minute, and like you've really got to be on your game in order to take care of that. I wasn't able to do that during June's NOPEX. I got very fortunate with Frex Day just because I was driving. I was actually driving up to Phoenix, Josh, to meet up with you. But yeah, so the answer to the question is, yeah, I wait for it to go into the green, and then once I've got an acceptable profit, I put in the trailing stop there, or I sit in front of my computer where I can actively manage it.
As a fellow retard, I know very little about options. Do you have a good intro? I personally learned everything about options from Tackle Trading. When I was first trying to get into this, I was just looking up like options for dummies, options 101 and stuff like that. And I found them, and they had incredible, I put a link to one of their videos down below that like very long formatted and extremely informative and dense information that for the basics. They did have a course that I took, or like it was like $100 a month or whatever, something like that. It completely worth it because afterwards I understood it perfectly. I took notes for everything, so it kept it easy. And then I just canceled my subscription. It cost me $100, and I learned them, and then I started applying them actively, and it was incredible.
But did you sign up for Andrew Tate's subscription? No, actually, sorry. Well, one other thing for that thing. So again, like I mean, the one investment advice I'll steal from Mike Maloney I'll give out is that it's probably never wrong to increase your own understanding, increase your own education. For myself, one of the things that I've learned painfully, because I learned it the hard way, is do not be shy about buying theta on options. If an option costs, or you get what you pay for, and if you pay very little, you're probably going to get very little.
But to learn the basics, like what option to buy, why to buy it, when to buy it, that's much more. If you want to understand the plumbing of an option and what you're actually doing, I'd say check out some just options 101s for dummies or something like that.
Oh, yeah, and one of the things too is also if we talk about buying options, do not forget about the equally lucrative position of selling options, because there's another side of that.
Yeah, if you're selling options is kind of like acting as a casino, and it's much more profitable, or at least much more strategic in a way. If you're buying a call, that's the most risky option position you can pretty much do, unless you're like selling a call or selling a put where you have an unlimited loss. Like ideally you're going to be running credit spreads, or if you have 100 shares, there's a lot of option strategies that you can apply once you understand how options correlate within each other.
Yeah.
So when fishing, I only took a shower once or twice a month because that requires us to go back to shore.
Yeah.
I was fishing. I'm sure that your mind was very clear after being away from technology for that long, and for that I am envious. Justin, what else is going on in your life? Anything?
No, no. Like I said,
Have
looking
you
forward to next.
maintained the extravagantly busy lifestyle? Oh, actually, I do have
Mhm.
something about Justin. He's on like a long ass fast right now. Like you're up like total. You did like 3 days on, then you'd like then you'd eat, then you did like 4 days on, then you'd
Oh,
have then
oh,
you'd eat, then you did
yeah,
like 3 days, and now you're on like a 7 day fast where you do a dry fast like most days. Like it's ridiculous.
yeah. No. So what I did a 4 day, then I ate, then I would eat for 24 hours. Not consistently for 24 hours. Then I did another 4 day, then I did 3 day, and that's what was when Boca, Josh, when I met it with you in Boca, and there was that thing at the that yacht place, which was nice. Yeah, I would have eaten food there, but then beyond that, like no, it's just like I said. This is day 8, day 8.
They ate, and you've been dry fasting and with that. So I mean, it's just crazy.
Yeah, like I said, I'm thirsty. So
Oh, here, don't mind me.
ass.
Do you guys do more covered calls or naked?
Oh, covered.
Yeah,
100%
I mean, if I
covered.
have 100 shares, then I'd sell the calls against it. I usually would. I would never just sell a naked call. Just not my style.
Yeah, it's ooh, yeah.
Could you see yourself at a hedge fund, Josh? If we were in 1980 and you could go back to where the trading floors were a thing, and it was just a testosterone-filled cesspit of men screaming at their computers, I could absolutely see myself doing something like that. Just
Well,
like,
that makes one of us.
for the environment, like I described it in a rude and lewd way, but that like I just mean like that to me sounds extraordinarily fun, but I do not have the emotional intelligence to sit at a computer every day and not trade like a flying monkey. Like my style before getting to GME is much more like a long term Jim Rogers type of approach where I sit back, wait for things to get really cheap, buy, and then just sell when there's hysteria. And GME is just completely different. I have traded here and there around the clock. Nowadays I could not see myself at a hedge fund because I'm way too business oriented, and I want to run a business instead, and that's kind of what I'm doing.
Yeah. One of the thoughts we had when we were trying to figure out a name for the channel was the Boomer and the Doomer, because Josh's investments is very boomerish. Lots of value. Not there's anything wrong with it. Lots of value, lots of dividend plays.
And Justin's was the complete opposite. Like when we made this channel, I would always tell Justin to fuck off whenever he talked about GME or the meme stocks. Like I was like embarrassed of it. But then you dive head first and shit happens. We caught over 100,000 fish. Would that be or dollars worth? I don't know. Had a great season with barely any electronics.
Yeah.
I would love to experience the pit. Yeah, me too, Hyder. That just sounds like a ton of experience and fun, and just like creating a good brotherhood. I don't think there's any more questions. Here, chat for a minute, Justin.
Well, yeah, like I said, Josh, if Josh would just, man up and shave his head, and do what needs to be done, we would all be on the moon in no time at all. So.
Yeah. Well, do you hold GME shares with your broker Fidelity in a CS, and are you concerned about Fidelity/broker shares?
Oh, that's a good question. I do hold a little bit of shares in CS, but that's mainly just for a hedge. I trust Fidelity, if that's the answer to the question. And I would trust any of the large brokers, really. The Fidelities, the Schwabs, the ITKRs.
The self-clearing brokers is what he's talking about.
Yeah, so I would trust, or back up. Yes. Okay. Yes. I get the argument that if you're directly registered for shares, you have removed counterparty risk. That is true. And I also get the fact that when you introduce a broker, you introduce the concept of counterparty risk. Okay. I get that. That is a fair concern. That being said, I think that the risk that I take on from the large brokers are de minimis compared to the advantages that I get, mainly the ability to execute and do option plays around my positions. That doesn't mean I don't think people should DRS, or I wouldn't encourage people to DRS. I wouldn't discourage DRSing. I would just say if you're going to do it, make sure you understand why you're doing it, which is to say, make sure you can clearly articulate the concept of counterparty risk and, more importantly, articulate in very precise detail what risk you see at your existing financial institution that is prompting, the decision. Because probably the answer really is to do like a portion. Like if it is a concern, like maybe we'll put like 10 or 20%, into DRS or whatever. That being said, I do have an account at Webull. I've got, I don't know, maybe like 10K over there. But like I like Webull for their charting. I like Webull for like
Justin
data.
has more brokerages than most hedge funds. I mean, he has accounts and is actively on like literally like 8 different brokers. So he has mitigated his counterparty risk more than anybody. All right.
Well, yeah. But like the one thing I just want to say this front is that like I would not trust the Weebulls. I would not trust the Robinhoods. I would not trust the Fly By Nights. I would stick with the big established players.
It doesn't like, but what you can do is kind of what I have is I have my main position in Webull, but then I easily have a bunch of other brokerages that I can start transferring them over to. What are your thoughts on the GME split?
That's a good question. So, like, I would say I'm curious to see what's going to happen with the options to see if retail. See, what really needs to happen with GME is like retail, particularly Superstock, needs to get their head out of their ass and say, "Oh my God, options are actually the time and a place for it." Even if they're just using option contracts to take delivery of it, so they're buying like 1 or 0 DTEs, at $1 just to buy shares, because that actually will completely cut out Citadel. Like, if you want to fire Kenny and cut out Citadel, buy 0 DTD options that are going to close in the money and use it to take delivery. Now, the problem when you do that is you got to buy in tranches of $100 or of 100 shares. I don't know how well heeled Superstock is to let's say like a $4,000 hit, but I will note that 4,000 is much less than 16,000 due to the split. So that seems to make it more approachable. As far as the market mechanics of how these things get settled out or whatnot, that I don't know. But again, I give a tap back to PiFi talking about Tesla. Again, GameStop is not Tesla, just to be clear, but well, what is it, Josh? T plus 35 plus 2? Like, let's see what starts happening September-ish. That's what I'd be curious. I don't know if I would establish a position before that, but I'm just very curious to see what this leads into.
What? I get the sense that Justin is the conspiracy theorist type.
The problem is that when you are a conspiracy theorist, so conspiracy theorist is one thing you want to be careful of. Likewise, you also want to be careful of not being a complacency theorist, like my
Justin is so far down the rabbit hole. Most people would. Let's say we do not make videos on the things that we talk about behind the scenes.
Oh yeah, like their YouTube would ban us so quickly. We already got one strike.
YouTube, so. We would have people knocking on the door. FBI, open up.
Yeah.
Are you guys still on the MOAS belief or just playing the cycles? Personally, I think what we need in a MOAS event, I think that we need a liquidity crisis, and because that is where the balance sheets would start to contract, and then we could see the real behind the scenes non-audited balance sheet of a Citadel or someone who is doing these crazy balance sheet manipulations. And when would that happen? Who knows? But I do think we are at the precipice of something happening within this next few months, maybe like midwinter, just because stuff kind of takes time to trickle down. But if we do see a liquidity crisis, that is when I think the highest probability of a MOAS event playing out is, if there will be. But who knows? I'm still playing the cycles, and I'm actively losing money with extreme accuracy.
Yeah, I would say, do I think MOAS is going to happen? Yeah, still do. When? No clue. And as far as the cycles go, play them. Learn how to play them. And then learn, when they're not playing the cycles, learn how to sell covered calls. Make money.
The brokers did a normal split when it's supposed to be a stock dividend split. So will Rancone pull out of GME shares from the DTCC, which would trigger MOAS?
Yeah. So here's
I have seen screenshots across Twitter of people saying something like that, but I have not dug into it. As I've said, I've been extraordinarily busy with business ventures. Justin, have you seen anything like that? Because you're much more in the weeds day to day.
Neil, so here's like, I suspect there's something there. Now, were there phone calls that were made behind the scenes so they had a mistake, or was it a genuine mistake because some accounting clerk coded something wrong? Okay, that I don't know. What I would say is this: GameStop and Cohen have far more resources than you and I do in order to pursue this, and as long as they're on it, I would say this seems like a problem for them. And I don't mean to say that we should discount it. I don't mean to say we should dismiss it. No. By all means, let's keep tabs on it. Like I said, let's put it in the file, and not like deep in the file, like put it at the top of the file. But I think what we need to do excuse me, let me just speak in terms of myself. What I focus for myself right now is I'm very keen to see the information that comes in. I'm very keen to see, the screenshots, the reports. I just simply say, yep, wherever there's smoke, there's probably fire. And boy, there sure is a lot of smoke over here. So I definitely get that part. But in the interim, though, particularly from 8:30 Central to 3 p.m. Central, like my attitude is okay. Well, listen, if you want to play this game, shenanigans, crime, whatever, it doesn't matter. You've got to be in it. You've got to be focused on what's going on right in front of you. So I guess what I would say is this strikes me as a very heavy lifting problem. GameStop's already on it. GameStop will have access to the legal teams, to the accountants or whatever, right? They will have their own correspondence and probably more information than we have. So I would say, as long as GME is looking into it, and I kind of sense that they are, let GME and Cohen wage that war, and then let us wage our war of basically just trying to figure out how we can profit from the short term of where we're at right now.
All right. What do you guys make of the BBIG T12 halt? Do you know what that was, Justin? A lot of inconsistencies in volume reporting before the halt. IBKR had volume at 1.3 billion. Yahoo had it at 12 million. Fidelity 900,000. Public 18 million before the halt.
Good question, Brooks. Yeah, I haven't been following it.
I personally have no clue.
Yeah, I'm sorry, dude, but excellent question. Excellent question.
I think Justin talked me into a contract on GME. Justin has done this with everybody. I've seen him shill all of our friends, young men, just forcing them and coercing them into buying GME.
You can't even use that. Well, it's not so much that, but you just say look, there's this asymmetrical.
That's what Justin did to me. Matter of fact. In fact, he gives you deals that you can't say no to. He forces you to take delivery of these shares.
Well, why wouldn't you take delivery of the shares? When you take delivery of the shares,
I'm talking about when he sent a bunch of shares to a bunch of different people through computer shares. But then he also he kind of does that to get your foot in the door, and then repetitively says, "Here's what I'm doing. I'm buying a bunch of GME," and then everyone's like, "Fine, I'm going to buy some too." So yes, that is Justin's classic maneuver.
Yeah. Let's see.
Do you guys see what happened with HKD was absolutely ridiculous. The stock went to thousands. It was there was no option change. I have no clue. That thing it was pretty cool. Megl, I didn't see anything with it.
Did you guys see what happened with the $8 OCC PCOing the $8 calls on Bobby for I think the next week and the week after? Did you guys catch that?
I did not catch that.
Oh yeah, we're trying to figure it out. Pi-Fi was thinking that maybe they just opened it by accident. I don't know, the weirdness. There's another smoke and fire. So again, what do you do with that? You just put it in the file. But that being said, you still want to trade your Bobby calls or whatever around that.
Shit. Well, actually, I don't have anything else, but I will share my screen because my mom sent me this picture of myself when I was younger, and let's see. I'll share my entire screen really quickly.
Ooh, risky move.
Just for you, Justin. Here, throw it up there.
Okay, 1 second.
So let's see. Here was
Is that you?
Yeah, she just sent me that. I had my bunk beds in the back. It was very nice, very nice. So that's what we'll end it on. I don't know why I felt obligated to share, but I just got that picture today. All right, guys. Justin, any last comments?
No, but the problem is I've got a monitor in front of my other monitor, and the first monitor I can't see the bottom of the comments, and so I do not know if we have any more questions or not. So Josh,
no, we don't. Okay. The questions have dried up. So guys, thank you for watching, and we'll fuck off now.